Hello, this is Greg Britton, your Spokane mortgage strategist. Going to answer the question, hopefully, today. Do mortgage rates change? And I should add, do they change daily? Because that's always the word in the news or from lenders or what have you, that mortgage rates are constantly changing. You better lock in before they go up, or you might want to wait. They might go down. So the question, do mortgage rates really change that frequently? So let's take a peek. And the way we're going to answer it, we're going to take a look at the cycle of mortgage money and kind of how that works. So let's go here, and we'll have a borrower. That'll be Bob from Bob's Burgers. Bob's going to buy a house for him and his family. So Bob's going to go to the bank. So here's Bob at the bank to apply for a loan. So my next question would be, well, where does the bank get the money? So let's look at the circle of how mortgage money comes to be. So the bank has to get it from somewhere as well, and they usually go to or sell the loan to the secondary market. And the two big players are Fannie Mae and Freddie Mac. You've probably heard of them. They were created by the government for that very purpose, to buy loans from banks so they can keep replenishing the bank's funds to loan to us to buy houses. That is definitely not Fannie Mae's building, but it's big, so I used it. Okay. How does Fannie Mae get the money? So they sell mortgage-backed securities or mortgage bonds on Wall Street. They sell a bunch of different ones, as you can see from the picture here. And so there'll be a set of them every day, and there's usually quite a few, and they all sell for different prices. Of course, the ones that have the higher percentage of return sell for more money, and the lower ones, well, of course, will sell for less money. But what's changing every day is the prices, and throughout the day, the prices the bond buyers are willing to pay for those bonds. So lots of different bonds, lots of different rates. The group of this group of bonds that are available are pretty much the same day to day. They'll vary every now and then, but it's the pricing that people are paying for them that changes all the time. And that'll become very important here in a second as we correlate it to your rates. There's our bond buyers. So our bond buyers are typically, there's a lot of different kinds. A lot of mutual funds buy bonds. Some companies just invest heavily in bonds because they're very safe. And they get the money, if we're going to complete the circle, from people like Bob here and you and I, who invest in companies, invest in mutual funds, and that's where these the funds ultimately come from us, which is kind of ironic since we're the one borrowing for the mortgage. So in a sense, we're almost borrowing our own money. So how does this relate to your rate sheet? Well, on any given day, a mortgage rate sheet will have many different rates, just like these bonds. Now, they won't be exactly the same rates, and they'll go in smaller increments, usually an eighth percent at a time, but there's always a set of rates available, and those do not change every day, contrary to popular belief, and there's no such thing as a single rate. On any given day, most of my loan products will have 10 different rates available to any person. What is changing is just what is changing on these bonds, the price you have to pay to get the rate. So origination fee, discount points, and those fees to get a certain rate for the end borrower are directly correlated to the pricing that the bond buyers are paying for these mortgage bonds. So you got different mortgage bonds, different prices, you got different interest rates, different prices, and it's the pricing part that's the moving target. Okay? And just so one more layer between these bonds and you and I would be, there we go. Profit margins, these layers here, profit margins for the bank, profit margins for Fannie. And different banks have a different needs. Maybe they have losses they have to make up. So that's why rates and pricing will vary from bank to bank. Okay, hope that helps explain where mortgage rates come from, how they change if they change. And I have to give credit here to my daughter Alex, who helped me put this together and show me this cool website, Prezi.com. Have a great day. Greg Britton, your Spokane mortgage strategist.